What's going on YouTube? Welcome back to another video. Today we're going to be going over higher time frame market structure and how you can use this to your advantage to form a bias on a daily basis. Before we get into the video, make sure you guys are following me on Instagram if you guys have not already. This is where you can find me, as well as I'm constantly uploading value and giving free education to the community through my Instagram, as well as I'm always checking my DMs and replying to subscribers and followers messages that you guys do send me. All right, back to the video. When looking at market structure, my favorite time frame to look at is the H1. So coming into the video here, each day at 12 a.m., right, I want to mark out my vertical lines. So we have Monday, 12 a.m. EST vertical line, Tuesday, 12 a.m. EST vertical line, Wednesday, Thursday, and eventually Friday, right, framing my weekly template. This makes it a lot easier to frame my structure from a day-by-day basis. So coming into Monday here, we can see we reached up into London session highs. We reached up into these London session highs here on Monday, and then soon after tapping into that liquidity pool, we leave it and break structure to the downside. So, right, my frame of reference now looking at this is, right, we came up into a liquidity pool and now we have left it. Structure in this scenario is bearish, right? And as long as price action can hold right below this level, right, I am gonna continue to be bearish, right? As you can see here, we came up, took out liquidity, broke structure to the downside, created this low. We then see the pullback into this last up close candle, right? I'm taking shorts here, right, because we've already came up, took out liquidity, and broke structure to the downside. So, right, looking at this higher time frame inefficiency, I'm gonna look to take shorts here, right, because structure right now on the higher time frame is bearish. So when structure is bearish, I'm going to be looking to take shorts in bearish PD arrays. When structure is bullish, I'm looking to take longs in bullish PD arrays. And it's not until that structure is broken do I then shift my perspective. Right, we come up, take liquidity, break lower. I'm taking shorts inside this bearish fair value gap. Bearish order block. Right, stop loss back up here. Right, targeting back below. I'm pretty sure there was a H4. This was a H4 inefficiency, right? We have this bullish fair value gap. We mark out our quadrants. 75% was our area of targeting. Price action comes down into 75%, and we make our money for a day. So this is Monday's price action. So Tuesday, I'm also looking for shorts. Right? Why am I still looking for shorts? Because we have not broken structure. We have not broken structure. Price action is still in a bearish market structure, and it's not until we can break above this level do I then anticipate higher prices. So as long as structure, right, has not been broken, right, we have not broken above these highs, and we're still holding inside of this bearish inefficiency, I'm looking for shorts. So coming into the market here, you could look for shorts, right, just like so, below this low. Very nice, right? Very nice 2 to 1 R. Or come into PM session here, it comes up, takes out liquidity, right? Then we see the break lower, right? Right, price action leaving it, right? Same thing, right? Taking shorts back below, right? The prior, right, AM session low or prior daily lows. So boom. So structure, right, from the higher time frame is still bearish. Right, as price action came up, took liquidity, and broke lower, right, structure is bearish. And it's not until that structure is then broken do I then look for longs. So Monday we took shorts. Tuesday we can also take shorts, right? And then overnight here, right, after price action came lower and swept liquidity, right, price action came lower and swept these prior daily lows, do we then see a break to the upside, right? We finally see a break to the upside, right? Breaking above, right, these highs. So let me get rid of this, right? We broke above these highs, broke above these highs right here, right? Reaching back up into these highs. So we see structure shifting from bearish prices to now bullish prices. We also break above this bearish order block. We break above this bearish order block, right? As we break above this bearish resistance level, it is now inverted to hold as support. So boom, we break above that bearish order block. Now it's held as support, right, to see higher prices. So coming into the market here on Wednesday, right, I'm understanding structure was once bearish. We came lower, swept liquidity. Then after sweeping liquidity, we quickly left. Right, breaking structure to the upside, breaking above these highs. So now structure is now shifted from bearish to bullish. So in this last down close candle, I'm looking to take longs here at this last down close candle, right? During London session, you could take longs during last down close candle, right? Pushing back higher. Right, come into New York here, right? We see the push higher, and then we see the drop, right? I'm taking longs as the market drops down here, right? I can be confident taking longs, right, as the market drops here, right? Because we understand structure is now bullish, right? So, right, we talked about how during bearish structure, price action is finding resistance at bearish levels, but during bullish structure, price action is finding support at bullish levels, right? We talked about that. So now, seeing the structure shift from bearish to bullish, now we're looking for support at bullish levels, which it finds it right here, right here, right here, and this last down close candle right here, right? Reaching back up into, right, opposing an efficiency, right? Reaching back up into this level, which is also a H4 bearish fair value gap. So, right, market structure has now pushed higher, right? We just pushed higher back up into this inefficiency, right? As we pushed higher, we left this gap. We left this bullish fair value gap. So the market is a series of expansions, corrections, expansions, expansions, corrections, expansions. So, right, come into the market Thursday, right, as we open up and we push higher here, right, into this resistance level, right, as we're in a resistance level, I can be confident then taking shorts, right? As we open up and push higher, I can be confident taking shorts, right, back down into this order block, right, back down into this order block, right, and we would have gone to winning trade, right, and right, same thing for the PM session, right? We came up higher, we took out the morning session high, then we broke lower, right? You can take shorts, right? Probably targeting back down into the AM session lows, this low, and down here, right? Because you have to understand the market is a series of expansions and corrections, right? We seen the expansion yesterday. We seen the expansion. Now we're anticipating the correction to create that low. We seen the high, low, high, low, high. We slightly created a low, created this high, right? Right, we slightly created a low again, right? This high took out this high. Now we're seeing the drop lower, right? Now we're seeing the drop lower. So we can be confident taking shorts here, right? Aiming to come back into this fair value gap and take out these lows here, right? For really nice trade, right? So that's overall how I'm able to form structure on a day-by-day basis, right? On the higher time frame, preferably the H1. So just some general overview here is, right, Monday we opened up, came higher, took out liquidity, broke structure to the downside. So now structure is bearish. Price action should find resistance at bearish levels. We find resistance at this order block, break lower, down to a support level. We come back higher into that bearish order block, break lower, come back higher into that bearish order block, plus take out liquidity. We see a strong break lower, take out this low. Then soon after taking out this low, we finally break above that bearish resistance level, plus take out liquidity. So now structure has now shifted from bearish to then bullish to now we find support here at this bullish order block. We see this push higher, find support here at this bullish order block. Then we see the push higher, right back up into this inefficiency, right back up into this inefficiency, this target. Now we're looking for the pullback. So coming into the market for the New York session, right, we've seen the big push to the upside. I'm looking for shorts here, right, back down into, right, for a counter trend trade. Even though the higher time frame trend is bullish, I can still take counter trend trades. It's just when you take counter trend trades, you want to aim for a lot less. So if I'm taking a long here, I could maybe aim for right at this order block. I could maybe aim for a 3-to-1 R, sometimes a 4-to-1 R. But since this is a counter trend trade, the higher time frame structure is bullish. I'm just taking a short here, right? Right, based off of what the market is giving me at the moment, which is right bearishness for a pullback. I'm gonna take it off for a 2-to-1 R or sometimes a 1.5 R, right? Depending on right where the inefficiency is, right? Since there's an order block here, I'm gonna take it off at the order block because I don't trust price taking out this low just yet. And as you can see, price action didn't take out this low. It found support here at the order block to then push higher, take out the shorts who thought it was going to take out this low, came up higher, take them out before then finally dropping lower. And now we're going to see the drop lower. So, right, we took the 2-to-1 R down into this order block, seen the push higher, took out these highs, these early shorts who didn't take profit. And now we're seeing the drop, the pullback lower down into the inefficiency. So even though higher time frame structure is bullish, we can still take shorts as a counter trend. We just have to aim for a lot less because at the end of the day, it's still a counter trend. So that's going to be it, talking over higher time frame structure. I hope you guys learned a lot from this and hope you guys can implement this in your own trading to form a bias and better you guys as traders. That's it for a video. I'm Arkham. Be safe. I have recently launched my private mentorship. In this private mentorship, you guys get access to beginner and advanced lessons that aren't taught here on YouTube from me, myself. Daily pre-market, live trading, post-market analysis, and trade breakdowns. This is where this mentorship really shines, is that consistent breakdowns, those consistent analysis on the markets every single day. You guys are learning from my experience alone, right? This is how I've grown as a trader, is from learning from other traders' experience, and that's how I want to provide to you guys through this mentorship here. We have live trading for the S&P 500, NASDAQ, and the Dow Jones. I am a indices trader, so these are what I'm going to be trading every single day. Psychology lessons, risk management, and trade management plan. Right, trading is more than technical analysis. It's more than a strategy. There's a lot of intricacies that come behind it, like a risk management, trading plan, and psychology, and we go over that in full throughout this mentorship, as well as access to all my models and daily teachings on the Market Maker X model. Right, I am a market maker trader. Right, I have a whole bunch of models from order block theory to the inversion fair value gap trade you guys just seen, to as well as fair value gap models and the MMXM model itself that I am giving you guys access to in this mentorship, as well as a private community where we're there sharing trade ideas, sharing analysis, and overall talking to each other and having a good time. So that all of that for about $30 a month, as well as we do have this early adopters here, which is capped at 120 members. Right now we're at 119. So when people leave the early adopters, a spot actually opens up. So if you guys are lucky, right, and you happen to join at the time someone leaves, you guys can get this insane discount. But most of the time it's, just completely full. So, you know, your best bet is to get into the Arkham Academy if this isn't already full. And last but not least, I have my seat at the table where you guys get all the benefits from the Arkham Academy and the early adopters, plus weekly Zoom calls, answering questions, backtesting with members, forecasting, more in-depth lessons like lessons on, you know, fundamental analysis and calling the markets. And this is only capped at 50 members. So this is for more of a one-on-one mentorship if you guys want to speak to me directly, answer questions to me directly, and actually learn from, you know, me in a one-on-one setting, in a one-on-one environment. This is for you guys. So, you know, that's the private mentorship that I am offering to you guys. It's the first link in this YouTube bio, right? Patreon.com/traders asylum. Or you guys can go on my Instagram, which is also going to be tagged in the link of this bio. My Instagram, Arkham Trades. It's the first link in that Instagram. That's going to be it for the video. I'm Arkham. Be safe.